Hey everyone, welcome back to Start with 1000. If you're new here, my name is Stephanie and I'm taking $1,000 and seeing how far I can grow it over 10 years without adding another penny. Today we're diving into SoFi's Q3 2025 earnings, which just dropped. And I must say the numbers were very strong. In this episode, we're going to be breaking down the results, what they mean for SoFi's future, some of my thoughts and opinions, and what really stood out to me. We were expecting earnings per share to be around 0.06 and 0.08, and the actual earnings were 0.11, which is a solid beat. The street was expecting revenue to be somewhere in the upper 800 million, and SoFi reported record revenue of $950 million. Now, as we discussed in the earnings preview video, we were looking for growth in membership, product cross-selling, and new loans, and those numbers delivered. SoFi added 905,000 new members in just 3 months. The CEO Anthony Noto called this quarter a quarter of durable growth, innovation, and brand building. And honestly, this is exactly what I'm seeing in the numbers for membership. So last quarter, SoFi originated $3.4 billion in loans for the third parties. So we were also looking to see growth in their product cross-selling, and they delivered in that as well. The company reported that cross-buy hit its highest level since 2022, with about 40% of new products being opened by existing members. And to make this clear, these are current members opening new products within the app. And if you remember, SoFi wants to be a one-stop shop for all of their members' banking needs. So some of the things that we were watching out for: credit quality, guidance and outlook, platform traction, they did discuss in earnings. One of the biggest stories inside of the report is deposit growth. SoFi's deposits hit $22 billion. That is up 18% from last quarter. And SoFi loves deposits because deposit money is cheap money. With the deposits that members make, SoFi can fund more loans, improve the margins, and reinvest in technology without overextending itself. When Noto was being interviewed by CNBC yesterday, he was asked who his biggest competitors were, and his response was a resounding traditional banks.
So that is helping drive.
Who are you taking share from? If you were sitting around on a Monday morning with a whiteboard, looking at sort of who you actually think of as your competitor set today, who is it? Because obviously there's the banks, there's a number of the digital platforms. I mean, I'm just curious what you would, I won't answer. What do you think?
Yeah, it's not what I think, it's what I know. We can actually see where the money is coming from directly every day, and it's really coming from the banks. In the United States, there's over 5,000 banks. The large banks have trillions of dollars of deposits. We're at about $33 billion of deposits today. We added a record of $3 billion of deposits. And those deposits are coming from the big banks, the largest banks in our country. And that's on the SoFi Money product, which, as I mentioned, is the tip of the sword. In Invest, we're really actually creating new investors as well as novice investors and helping them get up the learning curve. Within student loan refinancing, we really don't compete against anyone because it's a product that's not really offered by big financial institutions. I would say in mortgage, the big banks do not offer mortgage to everyday Main Street customers. And so in each product category, the competitor is different, but overall, it's the big banks.
Right. Okay, I don't know if you saw.
And I'll link the interview in the description below. Now let's discuss the loan platform business noted in the report as the LPB. This quarter, LPB generated $167.9 million in revenue. That's about 18% of SoFi's total revenue. And if you're not familiar with this type of model, SoFi earns money by building loans and selling them to third parties like Blue Owl and Fortress without taking on all the risk. It's like being the architect of a house. They get paid for the design and the construction, but someone else owns the home. One of the other things that I was looking for was credit quality, and their credit performance actually improved. Personal loan charge-offs fell to their lowest level in 2 years. So currently, their annualized charge-off rate for personal loans decreased to 2.6% in Q3. and that is down from 2.83% in Q2. So their goal is to keep it below 8%, and they are well below that target. The last thing I'll talk about is their guidance. I was looking for them to give guidance for the end of the year, and they definitely provided that. Because of the strength of Q3, SoFi raised its full year guidance. They now project revenue to be somewhere around 3.52 and 3.56 billion, and net income to be somewhere around $390 to $410 million for the year. Of course, there are still things that I'm watching closely. One of the main ones is their partner funding. The LPB model relies heavily on investors like Blue Owl to buy their loans. And if capital markets tighten, SoFi might have to slow origination because no one's going to want to buy these loans in a tight market. I'm also looking at credit cycles. If unemployment rises, we get more layoffs, people are still furloughed from their jobs, personal loan defaults could creep up. So I'm watching that pretty closely. The last thing I'm looking at is valuation. There is no doubt that their valuation is high. And after a strong run-up, the stock might be ahead of itself short term. With their valuation ahead of their earnings, this could pose a real problem in the future. Overall, I was very impressed with their earnings. SoFi is no longer just that student loan platform startup app. It is now a regulated bank and a technology platform that's scaling profitably, and that's really exciting to watch as an investor. So what do you think about SoFi's Q3 earnings? Do you think that it is sustainable in its growth, or is it just hype in the short term? Drop your comments below. I love to hear how you analyze and what you thought of the company's earnings. And if you found this video helpful, don't forget to like and subscribe and share the video. Until next time, take care of yourself. I'll see you in the next one.